Hello, good to see you back in this bite-size number 14. So we are going to analyze the current interest rate environment. Current interest rate is high. Should I wait or should I enter now? So this is a very important concern for every home buyer as well as investor. So in order to understand this implication of high interest rate environment, what we did is we actually sieve out the long-term trend of the interest rate, as you can see from this particular blue color 3-month compounded SORA. Okay, this is a long time series interest rate. And we overlay it with the volume, sales volume, to see whether we can gain certain insight. And from this particular long-term trend, we see when the interest rate is low with healthy volume, what would happen to the price? This is the question that we ask ourselves. And in the next slide, you'll get to see the insight. And this is also a low interest rate with low average sales volume. The green color bar stands for the healthy average volume. And in this particular case in point, this is the rising interest rate with healthy volume. And another case in point with a rising interest rate and healthy volume. So in such scenario, when we overlay rates with the property price index over the long term, we gain a very interesting insight. When the interest rate is low, so long you have healthy volume, the price will still go up. And when the interest rate is low, hovering below 0.5%, the price fall. And consistently, when we see when the sales volume is healthy, as you can see from these two vertical green bar, so long the volume is healthy, even with high interest rate, the price would still go up. So what does this implication tells us? It shares with us that we can still enter when the interest rate environment is high, because so long there's a healthy volume, the price would still increase. The next question we ask ourselves, what are the contributing factors that will result in healthy volume? And do we believe it? Let's take a look at all the latest articles that's being articulated in reputable media like the Straits Times and the Business Times. Healthy volume. Safe haven Singapore. Stable in a period of uncertainty. So these are all the competitive advantages that help Singapore position as a very safe haven. And that is the reason one for healthy volume, because foreigners would want to park their money, buy property in Singapore. In addition to that, there's also starting to see the easing of borders restriction. And when the border is, I want you to think in terms of investor, you'll start to stream in. And that is also another demand contributing to the healthy volume. Mass market condo demand and prices are supported by fundamentals. So when these mass market condos are supported by fundamentals, what it means when the seller were to sell their unit, they would be flush with good profit. And with the good profit, the additional profit will be triggered into the property again, whether they right size, downgrade, or upgrade to another condominium. So that is also another factor contributing to the sales volume, i.e. the healthy volume. Another insight I want to share with you is the newly announced government on the CPF ruling when they decided they are going to increase the new CPF income ceiling. It used to be a cap of 6,000, and going forward, the 6,000 income ceiling will be raised. What does that imply? It means Singaporean employee will have more money in the CPF, and when they have more money in the CPF, it will result in an increased demand, okay, to be used into the property purchase. And that again will result in healthy volume in the midterm to long term. Next, the recent articles in the February, we see that the prices of HDB resale flats up for the 31st straight months. So in addition to the mass market, we are also very well supported with a very strong HDB resale market. And one big chunk of the HDB upgrader to condo come from this group. When this group is having a very good, healthy profit, when they exit from their resale HDB, that would also result in healthy volume again. Remember, a quick recap, when there's a healthy volume, with rising interest rate, the price will still go up. So the key determinant is really about the key insight of health, of having a healthy sales volume. We are also seeing ultra wealthy individuals in Singapore coming slowly and surely more and more into Singapore. And this 2021 report, we see a very robust increase. And when a very high net worth client come into Singapore, they don't just come alone. They'll come together with their lieutenant, their generals, their pillars, and that would in itself contribute to the healthy volume of the property market. Why is that so? Because generally they require a home to stay. And even if they rent, right, you increase the rentability of Singapore property attractiveness. And that in turn will also indirectly create the demand for property investment. In a bigger picture, Singapore drew or attracted 11.8 billion in fixed asset investment in just 2021. And that created 17,000 jobs going forward in the next 5 years. And what does that imply? And this group of 17,000, I want you to imagine there will be a percentage of this 17,000 that either rents or buy a unit in Singapore. And in that way, it will also contribute to the healthy return, healthy sales volume. And remember the recap again, when there's a healthy volume, even with rising interest rate, the price will still go up based on the analysis. And there's another article showing ultra-rich individuals are getting more and more interested in setting up their home offices in Singapore. And we are beginning to see more of such family office going forward. In addition to that, there are super rich Chinese that's eyeing Singapore to park their wealth. They call it preservation of capital. And that also contributed to the healthy sales volume. And these are the Chinese buyers that continue to stream into the Singapore market because they view Singapore as a safe haven. And Sing dollar has always been very resilient. I want to quote you one story, and this is a true story. In 10 years back, okay, this very rich Malaysian Chinese bought a 1 million property Singapore dollar. Then the ringgit was about 2.3 ringgit. So meaning to say, he used a 2.3 million ringgit to buy a 1 million Singapore dollar property. Guess what? Fast forward 10 years from now, 10 to 12 years from now, even if this particular Malaysian Chinese were to sell at the same price at 1 million Singapore dollar, did you realize if you convert back to ringgit, it's 3.3 million ringgit. It is an earning of 1 million ringgit, just currency alone. So this is the power of having a resilient Singapore dollar. And that in itself is a preservation of capital from the foreigner point of view. So most of the foreigner, they don't need for Singapore property to appreciate supernormal profit. They just allow Singapore property to just appreciate in line with the long-term GDP growth in a very gradual way. When they convert back to their own currency return plus the capital appreciation return plus the rental return in itself is an attractive source of return. When the foreigners viewing that very purpose of preservation of capital, in that sense, they will also contribute to the healthy sales volume of the Singapore property market. So putting all this together, you realize these are the very real factors that will contribute to the very healthy sales volume. And remember, healthy sales volume, the green bar, with rising interest rate or high interest rate, the price effect is still up if you were to hold for the long term. And I hope today's interest rate analysis will give you a very important insight so that you can add value, okay, to the decision making of a property purchase. And see you for the next bite size. Bye.